Welcome back to Squawk Box. The U.S. Appeals Court now ruling that Nasdaq could not impose rules designed to increase diversity in corporate America by requiring listed companies to have women and minority directors on their boards or explain why they don't. Now, it's an interesting ruling. It was 9-8. It was a New Orleans-based appeals court found that the rules approved by the SEC ran afoul of federal securities laws. The SEC said it's reviewing the decision. Nasdaq said that it believed its rules would benefit companies and investors, but that it respected the court's decision and, interestingly, said they would not appeal. And we've talked to Adina Friedman a lot about the original decision. Of course, the original decision was aimed at requiring disclosure about the diversity of the board. You didn't have to do anything in particular, but if you didn't have a diverse board, if you will, you had to disclose and explain to some degree why and what was happening. And, of course, this all came in the aftermath. I don't know if it was in the aftermath but this was back in sort of the 2020 era when ESG and a lot of the things we've talked about, and now there's a sort of obviously big backlash to, have come back.
There was backlash from a lot of companies who were irritated by this, and when there was talk of the Texas setup of a competing exchange in Texas, there were companies who were saying, look, we're tired of getting harassed about this. We're tired of the expectations on this. And the idea of a competing exchange in Texas was one that a lot of companies internally were talking about as a
I remember we had a conversation with her in Davos. I think we also had a conversation with David Solomon. Remember, they had made efforts to diversify their board. I mean, there has been this move afoot, but clearly the move is going the opposite direction now.